Hey folks, welcome back to Real Estate Investing Unmasked. Today I read an article on Zillow and something that they said that I found very interesting. It deals with the video that I'm going to show you right there. Last year I said in 2020, and we're very close to it, sometime between then and 2020, I believed that there will probably be some kind of housing recession. It doesn't necessarily mean that the recession will be for the whole economy in the United States. However, I do think that the real estate market will drop sometime between last year and next year. That still is true in my opinion. I read this article today from Zillow, and they essentially said they think the same thing. They said in the beginning of 2020, they think that there may be some signs that we're going to have a recession. Not that a recession is going to be caused by the housing market, but that there's going to be a recession. Now, there are multiple things that could cause a recession or a drop in prices in real estate. One of the hugest things that you must keep in mind if you're going to be buying real estate, whether it's buying a house or buying it as an investment property, is that almost everyone buys a house based on the payment they'll make each month. A wise real estate investor will not. A wise real estate investor will buy a house based on how much the house is selling for, not necessarily the monthly payment. Now, the monthly payment is important because even a real estate investor can't pay everything in the world. They can only pay what they can afford. However, a good real estate investor will find a property that, one, they can afford, but two, has a lower purchase price. Now, I have told my spouse, I'm waiting for interest rates to go up. And when interest rates go up, house prices have to either remain stable or they have to go down. Now, the only exception to that would be inflation. And if inflation goes up, that means your dollar is worth less, which means it takes more money to buy the same product. So if I have a house that's worth $200,000 and inflation goes up, that means it takes me more money to buy that house. So a $400,000 house is the same as a $200,000 house because it had 100% inflation. That's the only exception. When that takes place, however, the Federal Reserve quite often will raise the interest rates to slow down inflation. They will make it harder to borrow money, more expensive to borrow money, which means it slows down the way that money is spread around. It slows down how fast money is printed, so it doesn't create as much. It actually costs you to borrow that money, which means the money is slowed down. So in the case of inflation, you actually want to have an asset locked in. It's almost like forced appreciation. If I buy a house for $200,000 and we see a 100% inflation rate, then my house goes from $200,000 to $400,000. I put no more money into it. Its value just doubled. If I put down zero, then I just earned 200 grand that I didn't have before. So inflation can be good for those who have assets and are holding on to assets that hold any kind of value. Where inflation is terrible is for people who are holding cash. Now, I'm holding cash right now. So if inflation hits, I'm going to lose. Anyone who had bought a house over the last couple of years will win. However, if inflation does not hit and the Federal Reserve, the feds, raise the interest rate to curb inflation, to keep it from growing, then what ends up happening is as they raise those interest rates, the people who are borrowing money to buy a house, or anything for that matter, their payment is higher, which means that the whole amount has to come down. If inflation has not gone up, which means my pay has not gone up as a consumer, then the house price or the good that I'm buying, the price of that has to come down if they raise the borrowing prices, the borrowing costs. Hopefully I haven't lost you. I don't think I have because you guys are smart. If I make $10,000 a month, I like to use easy numbers. If I make $10,000 a month, and under the current situation, you can buy a house that you make a payment of $2,000 a month. You lock it in place. Well, when inflation comes, not only does the price of the house go up, your income usually also goes up. So if we see a 100% inflation rate, then my income, instead of being $10,000 a month, goes to $20,000 a month. My mortgage payment stays at $2,000 a month. So my house value goes up 100%, my income goes up 100%, I'm happy. I don't pay the banks very much. The banks lose in that case. So inflation hurts the banks. Inflation hurts the people who hold on to their money. People who have assets, when inflation hits, those are the winners. So if you don't own anything and inflation hits, I'm sorry, you lost. You're going to get your income is going to go up, but so will all the cost of all the goods that you have. Now, in the case of what I think will happen between now and 2020, the end of 2020, I believe the Federal Reserve will raise the interest rates, and that will cause a slowdown in the economy. When there's a slowdown in the economy, I believe that typically when there's a slowdown in the economy, when it's more expensive to keep business going, businesses let go of employees that are not building their business. If you are letting go of employees on a macro level, then all of a sudden you have a lot of people that cannot afford their homes. They have to sell their homes because now they have to go find a job elsewhere. When they sell their homes, that means you have more supply. You won't have as much demand because people that have jobs most likely already have their place. They're not looking for another place. So demand is lessened, supply is increased. When supply increases, demand goes down, house prices go down. That is essentially what happened in 2007, 2008. You had a massive supply of houses that came on the market just real quick because everybody and their brother and sister were losing their jobs. All the interest rates had gone up from adjustable rate mortgages. They'd gone up where people couldn't make the payment. They had to sell the house because they couldn't keep it. But when everybody put their house on the market, nobody would buy the house. There's way too much to choose from. So in order to compete, the people that had their houses on the market lowered their prices. And as they lowered the prices and competed with each other, the price kept going down and down and down. So what did the Fed do? They lowered their interest rates. They lowered the interest rates, making it cheaper for people to borrow money. Because if it's easier for me to borrow money, I can pay more for a house. So I believe the opposite is going to happen. I think in 2020, we're going to see that the Federal Reserve is going to raise interest rates, make payments that are, making payments that people have higher, which means in order to make those payments lower and more attainable for the people that are making those payments, the purchase price has to come down. Whether it's a house, whether it's a car, doesn't matter. The price has got to come down to maintain that same payment. The only exception would be if inflation hits. I'll go ahead and show you the link to the Zillow article down below. You guys can take a look at it and see what you think. It is not the first article of its kind. There have been multiple articles that have talked about this same general idea. This is not a political hit on Donald Trump, either for or against. This is just how the economy works. Now at this point, we have seen a huge growth economically that has run for a very long period of time, with a lot of the growth coming in the last several years. Because there's no check on that, that's another reason why I think we're probably set for a recession pretty soon. But there's a lot of moving parts, with China doing its thing, with America doing its thing with China, with raising the tariffs and them having a little trade war. Usually what happens at the end of a trade war? Either a war or recession. So anyway, I hope you guys found this to be valuable information. If you have questions about this, please ask below. If you have a comment, you think I'm wrong, that's fine. Go ahead and comment down below and tell me I'm wrong. Tell me why I'm wrong. And I'll be glad to respond. But I wish you guys good luck, and I hope you success. Until next time. Oh, don't forget to subscribe.